Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We got CPI, of course. What else is there to say? Oh, let's pull up some charts here a little bit because there has been stuff going. Market is anticipating this number to be good. S&P 500 having a good rally yesterday and extending that rally overnight. Treasuries, on the other hand, may be telling a different story. We had a little bit of a sell-off yesterday. I don't know if that had anything to do with CPI, but there was an auction yesterday that was really bad. But look, they're recovering a little bit overnight. Let's look at some of the other markets here. Oil not doing a whole lot, but they had a really impressive rally yesterday. Gold and silver still kind of meandering around sideways. For some reason my silver's not showing up here. Come on, Ninja. There we go. And then Kappa maybe showing some bullishness. Bitcoin seeing some spikes overnight, and the dollar showing a little bit of weakness going into this news. This one used to show up 10 minutes before. I've been a little bit late most of these days. I like to try and be starting right when the treasuries start, but I've been taking longer to shower and stuff for whatever reason. Yeah, so I am not going to put any live orders out during the initial bit of this. My experience has been that what was that just now? Well, the markets are all over the place, dude. I wonder if people think that there are like leaks or something. I don't know. Anyways, US CPI month over month expectation spot 3%, core CPI expectation spot 3%. If it is in line or lower, the market is likely to rally. Actually, from the way that this market has been behaving, it might just rally no matter what. I don't know. There has been rumors like the people have been messing around with people. All right, this has really been like the most anticipated data drop I think I've ever seen. I mean, because it was such a big deal last time, and we were kind of like, well, we need 2 readings like that, right? So that means this one is like everything, right? If they come out and like core CPI was like 0.1 or 0, the S&P 500 would literally rally like 10%. I'm not like, that's like the forecasts from JP Morgan. Okay, so you're gonna see some wild stuff. I am gonna put some sim orders out here to test the responsiveness of my system, but this is too big for me to trade. Wow, what the fuck? Okay, so there was a big jump there. I'm just gonna put like a limit order way back there just in case. Like, you're seeing the futures move, but like the dollar hasn't really moved yet. Okay, here we go. Okay, it is core CPI is spot 2 versus spot 3, and the headline number is spot 1 versus an expected spot 3. That is a buy. That is a buy. This is gonna go wild. Okay, my system does appear to be, I mean, it's a little slow, but it is still putting orders out there for me. My micros are almost completely frozen. Look at that. Wow. NQ is up 4.44% on the session already. Well, I tell you what, they were definitely buying it before the event, right? So I don't know if any of the rumors were true or if people were getting it early or what all of that craziness was, but that was zany. I've never seen anything even remotely close to that. That may well just be the craziest news release we ever see, guys. That was nuts. Rumors won. Well, I mean, the thing was, everybody was expecting it to come in line or lower. So it's difficult to verify whether the rumors were legitimate leaks or not, right? Because you could have plenty of people coming in and saying, oh, I think that it's going to be lower than expected. I'm just going to share the rumor that that's what's going to happen. And then if I'm right, I'll look like, you know, everybody will listen to me in the future, even though you didn't actually have any inside info, right? So I'm looking at these micros here, and I'm wondering if that interest rate is actually makes sense. The spread in NQ is practically insider Tom. Oh my gosh. I'm trying to think of the adjective we can put in here for the title. Is this the biggest? CPI craziest data release ever. I really think that this was the craziest data release ever. I mean, the only thing that could have been more insane is if core CPI had come out at like 0.5 or something, right? Then it would have been twice as bad the other direction. But yes, I'd close. I mean, everybody was going long into it, right? I of course wasn't gonna risk my live account on something like this. And in fact, I am still staying out. Look at the spread there and everything. There's people to pick off, but I don't think that you want to play with that on the micros. But I've been long in my portfolio all month. I put money in I don't remember if it was October or November, but I've been telling you guys, haven't I? The flows going into the end of the month in December look positive, and it looks like inflation is moderating. So I told you so. I don't know. I'm not going to take a victory lap on it, but at least not too big of a victory lap. I tell you what, there's this guy on 25 basis points confirmed. Okay, that's a good question. I think probably not. But let's wait and see what the Fed tool ends up saying. I think it's unlikely that the Federal Reserve shifts their, you know, I don't think that the Federal Reserve is going to let the market think that it's going to be 50 basis points and then come out and, because of something that happened the day before, actually do 25. I just don't think that the Fed would operate that way. But will they actually raise in February? I think kind of probably not. Is kind of what I'm leaning towards right now. I mean, the market has been saying, no, they're not going to. Right? There's been this divergence between the median dot plot and the market pricing. And I think that the market pricing has been proven correct here today, right? So I think it's very likely that the December rate increase, although I think that they probably still do 50 basis points, could be wrong. But I'm making that determination based on the Fed's tendency to not want to rock the boat, right? So they don't want to surprise people that close. If it's going to happen, we're going to get something from like Nick Timrose, right? There's going to be a news story. They're going to put the market on notice that it's actually going to be 25 basis points instead of 50, right? But I think that what this says is that the current financial conditions are fine in terms of inflation. So that doesn't mean that you have to raise rates less or anything. That means you want to do exactly what the market was pricing in before this news. You do the 50 basis points, and then after that, you might be able to say, well, we think that the current financial conditions are going just fine, so maybe now we don't need to do anything, right? Carl Quintilla retweets Kevin Bambaro on FTX founder Sam Bankman-Fried. We do have to talk about this, and I think that he's talking about something that I am particularly interested in. My bet is he's going to flip on everyone. The real Tether story, the money laundering, all of it. Sam ain't gonna do well in jail, and he knows it. The fact that all crypto is a joke Ponzi will be clear to all, and crypto ecosystem is out of cash. I think so. Mohammed A.L. Arian commenting on the data. US CPI data comes in better than expected. Headline inflation rose spot 1% and core spot 2% compared to consensus forecasts of spot 3% for both. Annual inflation down to 7.1% and 6% as expected. Markets reacting well across the board to this better than expected economic news. By the way, you can do Twitter Blue. Should we do Twitter Blue? I think we should. Should we vote on it? Do you guys want to vote, or do you not care? Because I'm thinking Twitter Blue. Twitter Blue. Rocket to the top of. Oh, it still gives me you can only subscribe from the iOS app, but you're supposed to be able to do it from the website, I'm told, because it's cheaper through the website. Well, okay, this thing is coming back like massive, so this is exactly why I ain't messing with it. Like, look, when this started, I thought, oh, 3.5 wouldn't be too bad of a place to maybe go short from, right? Maybe not. I don't know. Yeah. But look, they're good. Well, they were at one point a good 20 ticks beyond that. So, and look, the spread is still more than 10 ticks. I don't think that I can get involved with a live account under those conditions. My system handled it though. I want to know that 1 week where like my micros just like completely froze. What was going on? I wonder if it had to do with my rhythmic settings, because I did come in and change my where is it? It's under window, right? Preferences. I did come in and change my updates right here. No, it wasn't updates, performance. Here it is, performance. I did come in and set it, the current setting. Oh, I put it pretty low. And just to keep up with market data inflow. So maybe that was the difference. Maybe the problem that I was having was rhythmic settings. Looks like they might be shifting here. I'm just gonna put like that. 3.5 seems like a really great. Oh, look at that. You take that one. Yeah. Cool. Like, I think you take that one and maybe just bid out at 349. You got a deal where you get the motherboard free? I'd have to see. Yes, I would be trading March everything now. What are you talking about? What's my market throttle on Jigsaw? I think it's just the default. But what's the default? Like the level 2 throttle, market depth throttle 50. 50. Okay, they're on the rise here again. How high do they get? I'm in an event like this, they usually do not beat out the original high, the original spike, because the liquidity becomes so strained and wild. You set it to 10. Well, I'm pretty sure here that the reason why I had a problem must have been that Rhythmic was like not sending the updates for the micros. Must have been what it was doing. So I think we've solved the problem. I will update Jigsaw as appropriate. But I think that adjust it based on market conditions is probably the way to go. How do I get Twitter Blue? I want the blue in the Twitters. Twitter Blue. Coming soon. You can only subscribe with the iOS app for now. About Twitter Blue. Bum, 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 ba-dum, ba-dum, bum, bum. Where do I sign up for Twitter Blue? Twitter Blue, or if you haven't already. What a crazy session. We went from 108.24. So when I look at this, relative to the S&P 500, that might have been the largest single candle we've ever seen. I'd have to go and do like a back test to be sure, but it's probably close. Oh, my CPU never went above 50%. I'm going to close that down now, okay? That might be the single largest print we ever had. In the treasuries, I don't think it is, because let's see here. Like, we started at 114 and we're getting to 115.12, but I can very clearly remember some days. When were they? I want to say even before. Oh, okay. So like probably the biggest one I can remember was like when Donald Trump got elected, right? When Donald Trump got elected and interest rates like rose big time, right? And I think that one, there was a day where they moved like 3 or 4 points or something like that. So far, this one has been 1.5 points in the treasuries. The one that's really like, woo, okay, is the dollar. Look at the dollar. Like, come back over here. Let's pull up like the bigger chart here, like my 6J and the dollar. With the dollar at 103 now, that really confirms it as like a sell. And oh, actually, can I change this? Let's change this. Oh, I guess I have to do dollar index candles. I should change that one to be like the spread now. Since nobody's had any problems with it. Other folks on Twitter presuming the same thing, there was a CPI leak. I don't think we'll ever be able to know for sure, unfortunately. So the issue that I have is that I said, I mean, I put the TikTok out, I put a YouTube short out too. I said we're likely to come in at spot 3, if not slightly under that, right? So spot 2 on the core number, the number that I care about, rather. Yeah, just perfect, right? So I could have come out and I could have said to people, oh, it's going to be spot 2. And everybody would believe me, right? And then everybody would think that I have inside information, even though I didn't, right? So like the issue that I have is, so if it was like, okay, if it was like non-farms, right? And they were expecting, you know, a certain number and it was like a big beat and I was able to call exactly what the number was going to be, then you could come in and you could say, oh, that's insider trading, right? That the number leaked, he knew what the number was going to be, right? But in this situation with the number where it's like the difference is like you had like 3 choices, like it's either going to be spot 3, spot 4, or spot 2 in like 90% probability, right? So I think that it's kind of difficult to come in and say that it was like really for sure. But big buts, there were moves before the official release wasn't there. There was big liquidity grabs where they just swept the book before the news even came out. And I've never seen, I mean, I think that I've seen like little like pre-moves before where we've kind of said, oh, was that insider trading? But nothing like that. That was just insanity before the data release. I find it astounding how you can have a number that is highly anticipated by the market. I feel like that almost every analyst that I looked at said that the number was likely to be under the consensus. It kind of makes me wonder why the consensus was spot 3, you know? So how can everybody be right and then we still be surprised about it and the market still react so strongly? Well, it's because the market's not informationally efficient, right? This is the kind of event that you literally cannot price it in, right? Like the S&P 500 rose about as much as it realistically could yesterday going into a news event like this. Still wasn't priced in. Look at the cumulative delta in ZN. Oh yeah, okay, so let's oh geez. Well, so it looks to me I only see net 8k buy, but there was definitely some wild cumulative delta moves before the event. It must be what you're talking about. You know what's wild here about the come and look at the volume profile in the treasury. Like we're actually just a little bit below the weekly high. We're actually like a little bit below the weekly high. So we'll see how that turns out. I would think that at the very least they would close at a weekly high. Correct, but ZN is 21K. Yeah. But I think the thing here is that if you were a big institution and you're playing this, you're gonna do it in the short term treasuries, right? You're gonna come in and you're gonna say these short-term rates are gonna come down like Mondo big time. Like think about it. Right now, they have the 2-year at 4.181 on the micros. Does that actually make sense? Does 3.5 actually make sense for the 5-year? Because I think the risk now at this point is that the short-term rates come down big time. I mean, like my base case now at this point, let's go look at the tool. Let's go look at the tool first. Yeah. Oh, I want to try one more thing with Twitter Blue. Twitter.com. More. Twitter Blue. There we go. Subscribe. Oh, that's funny. You can subscribe. I'll have to do it after the stream. You can't use PayPal, so I'd have to pull my card out and everything. I don't want to do that right now. Yeah, they're gonna do it in the short-term treasuries. Anyways, let's pull up the Fed tool. I mean, the other thing when looking at the 5-year here is there's just like not even actually enough liquidity for cumulative delta to actually really move, you know? So you might see something where throughout the net of the day, it does end up being a really significant change in cumulative delta, but it will take a little bit because of liquidity and stuff, right? Okay, compare. So, hold on. Oh, that's February. Gotcha. Okay. So, they're basically all saying 50 basis points, right? And it doesn't look like that in the one day that it's changed that much. When I go to February, they're still pricing one more after that. I kind of have to think that the 425 to 450 would start to show up, but it hasn't yet. Then when you get into, well, okay. So far, the SOFRs, the secured overnight financing rate, hasn't not really shifted enough for people to be saying that like they're not that the Fed's trajectory has changed. Not yet. So the issue is kind of, okay, they want to raise interest rates, and the market has been saying they're not going to be able to, that they're going to have to back off because the economy is going to be so hurt, right? So now that we have the data and everything, kind of makes you wonder, because given that inflation is declining and the Fed might have opportunity to chillax, that's going to be really good, at least for the stock market, right? Like, I gotta be really careful what I say here, because I don't want you guys to be like, this is a prediction, and then if it doesn't happen, then Seth was wrong or whatever. But it is possible that we've already seen the lows, right? I tried long on a funded account after the news and got screwed. I expected to be like last time, small pullback into continuation and not like 80 points retracement. I gotta tell you, Kevin, on an event like this, trading it afterwards is a really risky proposition. Did I accidentally click somewhere on the 30-year? It looks like I did, because it's showing a number there. Luckily it's not on a live account or anything, so I'm just gonna flat that. I should just disable placing orders on all these. There, that'll help. Now your guys watching, Lucas watching oil, that one is a little curious to me, because we had a really strong rally in oil yesterday, and I would have thought that with this news and everything else that maybe it would continue to rally, but I mean, it's up $2, I guess, but it's a little bit less than I maybe would have expected. At least it was only a funded account. Right, but you lost the funded account still. Yeah, it's just like the liquidity has just become so shit after a move like that it really becomes difficult. So if I was really going to play it, okay, like if I absolutely insisted on playing it, what I would do is, you see the initial move, it comes back, right? I'm not going to get back in until I see this thing like really catching some trend going up again. Like I don't think that I would be able to try and pick a limit order and get filled, and you know, that one's not going to work, right? You're going to have to try and catch it with the momentum and hope that you're catching that leg and then it has a little bit, and you might even want to be waiting for it to go a little bit first. Like the lowest that we got was 20, so it was like at 20. I don't think that you can say, okay, it's pulled back like 4 ticks now, it's ready to go. I think that I would have to wait until like maybe 29.5. But then when you look at that, look at where we are now. Did you actually make that much from it? No. Right. It's just like not. I don't know. A slower move, not a slower move, a less significant move, then you can try and play those games, right? You're probably better off trading in and out of the order flow resulting from the news. I feel like, especially for a combine account with like a $500 limit, I think you could get away with it now, but I don't think you can realistically trade the first 10 minutes of that. No way, because the slippage and the chance of a loss is just so high. And I've blown, well, not blown, but I mean I've taken big losses in action like that so many times, right? So there are situations where you can pull it off, but oh, well, if you did 1050, then the count is still good. But we haven't actually, I don't think that last CPI it straight up continued though, did it? I think it was a lot like this one, where you have an initial spike and then the next leg up does not get quite as far. Which what we know about liquidity is a lot more likely to happen, right? See, now that we've formed a clear liquidity hole, now you can play this game, right? Like that's the whole thing. Like when I think about the market making kind of perspective of things, I need to have that pivot in my favor. With nowadays markets, a combine with a 500 daily loss rule is probably suicide. Well, it's you can't trade ES with it. Yeah. Yeah, it'll just send it to me on Discord. No, you can't, Kevin. Why would you ever send me a picture? I can't believe you even ask such a. So offended. So offended. My cumulative delta in the 10-year just looks broken. Like, look at that. Like the difference between high and low on cumulative delta through all of that is nutty. I feel like the opportunity for me to market make in this is maybe already passed, unfortunately, in the 10-year. Also, I'm a little weary about the rates here. I mean, there's no way I just don't feel comfortable trying to trade micro 10 years when the spread is more than 10 points. 10 blah, 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 10 ticks. But I'm kind of sitting here looking at this like, is 3.5 too high now? Because what were we at yesterday? Oh, yesterday we were way higher than that, weren't we? Yesterday we were like, let's come back. I have one of those charts open somewhere, right? Yeah, like yesterday we were at like 3.58. Oh, you have last CPI? Okay. Okay. Oh, but wait, is that ES? That's ES. You're okay. Okay, I was thinking the treasuries. You're totally right. In ES, it just kept going, for sure. In fact, it was a bigger move overall, wasn't it? Yeah. What I was getting at was, especially when you have a more, I want to call it a more pure instrument, but like a commodity or something where the futures market is really the primary market for that particular thing. You get these really big issues with liquidity, right? And so when you have everybody come in and just hit market buy based on what the news is and hope that they get a good spot and all of that, right? It is, especially in a move as big as this, it makes it really hard to overcome the initial spike. It might do it later in the day, but usually what you're going to get is a huge initial spike, pullback that doesn't quite make it as far, just because of the liquidity overall. It's like there's just too much weight from this ginormous liquidity vacuum that you've left behind you, right? In the S&P 500, because it's a derivative and it's going to be based more on the price from all of the individual stocks, could be a little bit different, right? Those kinds of rules, what I've found is that they still apply in the S&P 500, but they don't appear to be quite as impactful, quite as strong. You know what I mean? But I don't know if this is a situation where, like, if you were doing, who would I do? Who are these guys? There's these one guys where they have like those rules, like they have like a daily stop loss and all that sort of stuff, but it's only applied like at the end of the day. So you can still fight and try and make up the loss and stuff like that. If I was on that combine, then I would be like, yeah, just go long and try and hold it all day. Hope that the whatever price that you got was good enough, right? But I think I've learned my lesson. Like, I've made some really good trades during economic releases and in big economic releases. I think that for the most part, off of non-farms in particular, that's a net loss, because some of my biggest losses have been on Fridays. But I don't think I've ever had a situation where it was one of the biggest events and it worked out, trying to trade it immediately after the news, at least. So if there's like a point at which the market simply becomes too volatile to realistically hold risk for a small retail trader, if there is a point at which that gets hit, it has definitely been hit today, right? And I knew that was the likely outcome for today, so I said no live orders on this one. And kind of the way that I've been playing it with the micro treasury yield futures is, if the spread is larger than 5 ticks, it's probably not a market I want to be involved in. And the whole thing is that market making in that kind of situation becomes really sketchy, because the market orders basically dominate everything, right? So theoretically speaking, you wouldn't have an edge there from a market making perspective. Guess this is the last time I trade directly after news. Oh, I wouldn't say never trade directly after news, just not the biggest headline numbers, right? So I think that it really helps in situations like this to really understand what your edge actually is, right? So if you're doing market making, then presumably your edge is understanding the correlated assets and having a good bid slash offer based on that is more likely to be able to get you that one tick instead of blasting through you, right? That's the edge in a market making strategy. So if we're seeing a market where there's only a few hundred contracts at each level in the treasury and they're trading thousands and thousands of orders, and so it's moving a whole 32 plus ticks a second, right? Your market making strategy doesn't have edge in that situation, right? Okay, so what about if you're speculating? If you're doing what I'm doing, which I would consider more speculation, right? Do you have an edge? Well, in a situation where everybody was expecting the number to be big, and good, and it was good, and there was a big reaction off of it, and everybody in the market is playing it, where does your edge as a speculator come from, right? What is it that I know that nobody else does, right? It doesn't really make sense, does it? From my perspective, to try and trade this, unless I think I'm faster than everybody else, right? Like if I'm coming over here on the micro yield futures and I know what the price is relative to the 10-year, and I can see this offer sitting out there and nobody else is going for it, then I pick it off, and those can be great. But in this situation, it's just like too fast, right? So for me, in a speculation, it's going to be better to be trading a move that's not quite as crazy and has more nuance to it, right? Something where my understanding of the macroeconomics and a more nuanced understanding of the actual data that we're having and so on and so forth. And then I have an advantage, right? Who actually has the advantage in a move like this? I think it's going to be the people that are fast, so like algorithms. And I think that if you have some sort of key level, so if you can come in here and you can calculate that a 4.15 interest rate in 2-year futures is not right. What the fuck? So there was like an offer put out there and nobody was going for it. So he put it below, but okay, so like I see a one lot there at 4.138. My DOM must be messed up, because for him to put an offer right there, it should be executing this order at 138 and 13, right? So I don't know about that one. How about let's come into our 2-year and just redo it. Like go like this, yeah. 2Y December. Okay. Let's see if it reloads better. Here's the treasury is coming up to a new high. Right. So if I have some set number where it's like based on these numbers, 10 years should go to like 3.40, then maybe I have an advantage, right? And then I could feel more confident trading this. And unfortunately, what a lot of retail traders do in a situation like this is, oh man, if I catch the trade the right way, I'm just gonna smack it out of the park and I'm gonna make so much money. Not realizing that they're basically ignoring what their edge is and gambling. Yeah. Now we got enough flow to play in. Now we have enough flow that we could play in this. Unfortunately, I don't think that there's any way that I could get good fills here in the 10-year. Like, I'm just not going to pay up 10 ticks. Maybe if they filled me on limit orders. It worked outside of, yeah. I think for us to look at the approach on that, no, I don't think so. So I think the issue on that sort of reasoning is that I should be able to come in and look at like how much volatility should there be in the market, and as such, how far might it potentially come back. How far it might potentially come back, I think, would have to be a something I would determine based on the implied volatility and the resting liquidity. And the issue is that if I see it come back this far last week, that doesn't mean that that was like the total range for it, that it was possible. You get what I mean? So you have to have some sort of analysis that kind of is able to factor in the scenarios that didn't happen. You know what I mean? Because really trying to predict how many ticks it's gonna come back is kind of a crapshoot from just watching it, you know. Maybe there's a model to figure it out, but like just me trying to do it by feel, it's a crapshoot. Well, I thought like it's just gonna go, and maybe they breach the highs and run a little bit, but it kind of got short circuited there, didn't it? See, like look at this. I could try putting an order in front of this 61 lot, right? But I bet you he would probably step in front of me. Are we going to the moon today? Well, tough for me to say if the equities will rally more from here or not. NQ, it's 4.26%. Yeah, Bitcoin definitely did jump. I'm a little concerned about Bitcoin though. Well, the big risk in Bitcoin right now is that Sam Bankman-Fried has dirt on the rest of the industry, and he shares it with prosecutors, and we see more implosions in the crypto market. That's the risk over there. But they did react positively to this news, as all risk assets have. How sizable as well? $7,000. $700, $900. So let's call it 1,000. 1 divided by 17. Well, 1 divided by 8 would be like 16%. So that's like a 30% increase, isn't it? Okay, so my news squawk is pointing out that we're getting some continuation in natural gas. Interestingly enough, corn going nowhere this morning. Copper took a big rise though. Corn, the big underperformer today, only 0.38% to the upside today. And then ZT, although that's a big move for ZT, it's just, it doesn't get reflected properly in the net change. Like ZN, it's a 1.28%. That's like a massive jump for a treasury, right? That's curious. Did you see how the micros moved down a little bit, even though the 10 years coming down, the 30 years stayed up there? 5 years coming back. Are we getting flattening? Yes. Like overall for the move today, it's steepened considerably, but we are seeing a flattener at the moment. I guess what that is suggesting to me is that we may have diminished edge as a speculator trying to play the 10-year. Well, look, now you've actually got a spread. You think anybody's ever gonna fill that big boy at 3.449? he's just sitting it there, just like, yep, I'll take as many fills as you'll give me. Well, let's come over to Zero Hedge and see what the numbers, what the market thinks about the numbers. Musk disbands Trust and Safety Council after inaction on child porn. Jeez. I see the SEC charges against Sam Bankman-Fried are out now. Surveying the market chaos after soft CPI print. Fear of the dovish right tail response to CPI is back bigly. Okay, well that was before the news, so. Okay. Cooler than expected CPI unleashed hell in markets, prompting a massive drop in the Fed rate trajectory expectations. The odds of a 50 basis point hike tomorrow are basically unchanged, but the market's repricing the February odds dramatically, with 50% basis point hike tumbling to just 32% now from a high of 60%. Stocks exploded higher, with NASDAQ leading the charge up over 4%. If only there were signs yet. So that's so funny. Like, it is really quite hilarious that the put call ratio was at near all-time highs going into this event. Like, could the options be any worse positioned for that kind of news. Like, man, oh man. Ten-year Treasury yields plunged to last week's low yields back to September levels. The 2-year boot to its lowest since October. The dollar dumped, Bitcoin soared back towards 1800, which is a 1-month high, and gold spiked back above 1800, trading at its highest since June. Will Powell unwind all this easing of financial conditions tomorrow? I'm not. I don't know why I'm tongue-tied. First of this week's big risk events has finally arrived, and while the world and his pet rabbit is focused on the numbers' potential for dovishness, bear in mind that expectations are for a... Oh, no. This was ahead. Under the hood, energy costs and used cars were the biggest drivers of the cooling. See. Service inflation year-over-year rose modestly as goods inflation year-over-year dropped again. The food index increased 0.5% in November, following a 0.6% increase in October. Okay. Other components were a mix of increases and declines. Perhaps most notably, if we exclude shelter on a sequential basis, we now have deflation, which of course we can't do, especially since both shelter and rent inflation are still rising at a rapid pace of 7.12% and 7.91% respectively, but about to roll over hard. The punchline: if one excludes food and shelter, it's hard to find any inflation, and in fact, we may well have disinflation. And given the violent rollover in M2, we suspect inflation will continue sliding. Okay. So, I'm curious, how will the Fed react to this? Because that kind of does suggest that if financial conditions don't ease, that it's not going to be good for the economy, and then the Federal Reserve has to flip really, really quick, right? You won't be a hero and try and scalp the open. The S&P 500 open here is going to be super interesting, although it kind of looks like some people are maybe already trying to play the gap. Yeah, I do see ZB breaking highs, and you can see here the micros still like a really massive spread, but pushing down because of the ZB. Although it does look like maybe the 5 years going to drag him back down. Man, you know what I think part of my problem today is that I've been sick for a number of weeks and haven't been working out very much. I worked out yesterday. I really wanted to get in some like aggressive lifts, so I did. And like when I woke up, like my traps and my neck were sore. So that means that I did hit the muscles really hard. Maybe going straight for cleans wasn't the right choice. But so I think that my nervous system is been hit a little bit from working out and not having worked out for a while, you know. Sometimes I just get in that mode though where like I read too fast. So sometimes I will really scan things. Like I really, like when I was reading that Zero Hedge story, I was like, okay, this part I don't care about, this part I don't care, because I know all that stuff. And so I kind of scan through it and read through it really quick. And when you're doing that, it becomes hard to read it out loud, right? Because your brain wants to read it faster than you can speak. Okay, I do see a little bit of iceberging in support, and this kind of little shift in the volume profile at 06. I'd say liquidity is still really light in the 10-year. You know, anything below 1,000 is a little suspect, right? I gotta say, it's annoying waiting the whole day for news to be down and done for the day in 5 minutes. Yeah. So here's something else I should say. Well, kind of I want to take a victory lap here, because my TikTok at the beginning of the like right after Thanksgiving was, oh look, all of these people are making like these big prognostications about what the market's going to do. The market was down this first day after Thanksgiving. That must mean that the market's going to be going down for new lows, yada yada yada. And what did I say? Well, people always get too excited after a break, like they want to get back into it, right? And my experience has been that I'm often too anxious to get in and lose money, right? I'll build an event up big and then I'll blow it, you know, and just think, I would be doing amazing if I had just sat out that big event, right? And then I said, look, there's all these events that are coming up. The flows do look positive, and assuming that there's not some really negative data surprise, probably we rally into the end of the year. That's what I said. I go out there, especially on TikTok. I don't know what the deal is, but the influencers that TikTok shows me, I really wonder sometimes, because I look at that and I'm like, I know more than these guys. These guys don't know shit. And there's this one person in particular. It seems like he always has a decent number of likes on his videos and stuff, and he probably gets 10 times the amount of traffic that I do on TikTok. But he does not know what he's talking about. And he has been bearish the whole month. And you know what his main thesis was? Like one of the primary pillars of his bearish thesis was that the market broke out of a ascending wedge. There we were in an ascending wedge and we fell out before the pattern completed. Like, really? That's what you're gonna base your investment thesis on? Are you effing kidding me? You are so clueless. So clueless. And then here we get this news. Super good for the markets. I bet you this guy, I don't even remember his name, so I can't out him, but I bet you this guy, he's going to be like, well, the market's rallying on this, but I'm still bearish and yada, yada, yada. And now we get really good opportunities to sell things that are overbought and yada, yada. So I bet you what's going to happen. It's just so many people out there, especially influencers, they don't understand that it's the orders that move the market. And especially on a month-over-month basis, it's the orders, man. Fundamentals factor into it, but it's because it drives orders. So, yeah, we have good flows going in the end of December. But then the last thing that I want to add to that, and kind of where I was going with this, and like the big takeaway, there tends to be better opportunity in January, right? January, February, and March tends to be the best months of the year for me personally, at least in the interest rates. Might not be the case in the S&P 500, but you get a lot of really good moves at the beginning of the year. And I think that this situation that we have today really makes the end of, or the beginning of next year more interesting, right? Because the Federal Reserve and the market have very different expectations about what's going to happen, right? So I think there's going to be some opportunity in there, and I personally am holding back on taking on too much risk in this situation, with the idea that there should be good opportunities in January and February. Now, one more thing. I don't know how the Fed's going to react to this, what they're going to say tomorrow. Surely they have to say something about it, but does the Federal Reserve come in and start to say, you know what, we're actually, some of the things that we're seeing make us concerned about deflationary pressures? You know, that could happen. But I could also see the Federal Reserve coming in and saying, well, this is a good print, but you know what I mean? Cool. So I'm doing a little bit of sim trading, market making here. I don't think I want to take on too much inventory here ahead of well, I want to get my break even like below 115 even. So I'll take a contract if it gets to there. Did you see that? No, I didn't. What happened? Did the S&P sell hard there? So look at the flow in the ES here since the open. Like there is some pretty aggressive selling going on in the ES, and the bids are just gobbling it all up. It is kind of like I think that all of the technical analysts are going to want to come in and try and play the gap fill trade here, right? But I don't know why you would want to sell the ES here, you know? I bet you that I'm going to see, it always happens in this situation. Somebody's going to come in, they're going to show me a scalp they caught where they made some money short on the short side here in the ES off of that. But I'm not, I wouldn't be going short. Right. Okay. That one took a little bit longer to get filled than I would like, but it's okay. Okay. It's kind of funny. The range for the micro treasury yield futures here is actually pretty tight, all things considered. There was that spot where I was talking about 3.5 though, wasn't there? Right? I think there was one point where I said, you sell 3.5, and then it went through. And if I had had my DOM armed, I totally would have clicked, but I think I would have taken profits on it earlier than this too. I don't think I would have held it this long. Tim Seymour says gold loves that CPI. Yeah. Well, you know, we started at 1800 and now we're 1829. Gold could get interesting here now. Do you think gold, you think that in 2023 gold can get above 2000? Maybe, heck, hey, maybe even 3000. It's possible. Totally possible. Okay, well, I think I'm gonna try. Oh, okay. Maybe not. I was gonna say I think I can get away with bills below 0.25 a little bit now that I've kind of built up a buffer, but back I'll do this. So I think I'm pretty likely to get the 0.25, but I don't know if I'm, you know, how long it'll be before I see 0.3 again. Okay, good. Yeah, the seat's just a little bit harder to get filled there. Good. You know, I tell you what, the treasuries are trading in a fairly tight range here at the moment. The book is still very, very thin, but there is so much level 2 activity out there, man. Pantheon macro disinflation underway. Fed set to pause after 50 basis points tomorrow and 25 basis points on February 1st. Ian Shepard on US CPI in November. Well, that sure went. I wish that I had another contract, but that's okay. And my spot in the queue back here isn't very good, right? S&P 500 turning back up, though. Oh, we finished the playlist. Shall we go back to the hype tracks? Your second to last chance to get it wrong in 2022 from Zero Hedge. And the little quote they have there on the front page. If you need me to tell you this report will have a large market impact, then you are in the wrong job. As such, I am going to talk about things related to inflation and not today's release. That's great. Can you explain on ES, for example, when there was and still is selling, why the market goes up? Sure. So in the S&P 500, remember that it is a derivative. So if everybody that is trading the S&P 500 futures is hedging or speculating that it's going short, but all of the people that are buying the actual stocks are buying, then you could see it, you could see that kind of a divergence. I'm not actually seeing a huge divergence. Like there was market selling on that open by to the tune of about 5,000 contracts, and now it's the cumulative delta is flattening out a little bit as the S&P 500 recovers 10 points there. But the basic gist here is you can see a market move up or down on not a lot of volume because the bids and offers pull, right? Like market orders aren't the only thing that are involved here, right? There's also the passive limit orders, and those limit orders are constantly adjusting based on correlated assets and stuff like that, right? So one of the things that you can see that can happen, and I think that you're more likely to see in a situation like this, is the dollar moves down and the S&P 500 moves up, and you might not see super strong buying volume as it moves up because the currency correlation is the primary driver there, right? So this is why I think if you're going to be trading order flow, you need to have the order flow for multiple correlated instruments up, and I would recommend tracking where the money is coming to and from across the entire CME futures complex. So you've got the interest rate futures up, you got the equity index futures up. Look at silver and gold, look at copper, look at oil. Even some of the less popular ones like corn, wheat, these sorts of things. Follow the currencies, the 6J especially. Well, at least the Japanese yen and the euro you want to follow. And get an idea of where the money is coming to and from and how that picture is all sorting out. Hold on. Here, you get the dog, Abby. No dogs. No dogs in the office. They would just give allergens. Okay, cool. Well, I don't want to add more inventory higher up than my original position here. So I may just have to let this one contract ride. So in the meantime, you get to look at the baby. He's like, whoa, what is this? So many numbers. I'm concerned. What are you doing here, Daddy? This looks a little crazy. There are so many numbers. I don't know if this is something a sane person would do. See, I can't get him to look at the camera. He wants to look at the numbers. I did a TikTok yesterday. I was watching the baby, so I just recorded it while I was holding him. And he looked so cute in that video. Because you get the ring light and you can see his kind of blue greenish eyes. Incoming hedge fund analyst 2039, I hope. My first child, Asher, who is 2 coming up on 3 here. That's the binky here. He is straight up autistic, man. I don't know. Like right now I'm sitting here like, is he ever gonna learn how to speak? I don't really know. I mean, I think he's more ADHD than he is autistic, but when you come into like his difficulty communicating with people and understanding people, it's autism. It qualifies as autism, even though it's probably driven more by severe ADHD. So I'm like, maybe he'll be a high functioning autist, you know? Maybe he can be like, we can train him up to be like Michael Burry, you know? But I am increasingly looking at the possibility that he may be dependent on us for his entire life. He sure is a handful. Now this one is a little different. I don't think that this one got the autism. So maybe he will be the hedge fund analyst. Or maybe they can team up together. He can kind of be more of the risk management, and promotion negotiation person, and Asher can just be the data guy. Yeah, that would be a pretty good duo. It can be identified that early. So everything that I've seen is that kids usually don't get diagnosed until they're 3. But there's something going on. That is kind of the conundrum of it all, is that you can't really get a clear picture of like how significant it is at his age. But I can just straight up tell you, this child is different from the other child. I was constantly asked, I don't know why it was on my mind to begin with. Maybe there was some things that I saw that kind of made me wonder. But I was constantly asking, is Asher autistic? Well, he reacts to my face, so that must mean that he's not autistic, right? Yeah, he reacts to my face, but like as time goes on, there's things that it seems like he should understand what's going on, and he doesn't. You know, like anytime. So I give you an example. You tell him to not do something, he completely ignores you. Right? You say, don't get up on the counter. He's gonna get up on the counter. And like most kids, you would tell them don't get up on the counter, and they would maybe do it a couple of times that day, and then they would learn, okay, I'm not supposed to do that. And they would at least know that if they're getting up there, they're doing something naughty. You know what I mean? This kid, it's like you tell him to not do that, and he just completely ignores it, like he never said it. He doesn't understand that you said that you're not supposed to get up on the counter. He doesn't understand that even though you've taken him off of the counter 20 times in a row, that I don't want him up there. You know, it's like, it's not normal. I'm pretty sure it's not normal. And it's like, what do you do, right? There's nothing that you can do, I think, except for like try and help with the communication and wait and see what happens, which is a hard thing to do as a parent, man. But this one is much more fun. This one responds to you a lot more clearly, and he is literally. Okay, let's not touch that. Not that anything bad is going to happen, but I don't want you to get in the habit of playing with chords and thinking chords are fun. No. He is perfect baby age. He can't he can scoot on the ground. So he doesn't crawl. He just scoots on the ground. He can hold his head up. He can look at you. So this is as cute as they come, guys. This is a soak it up. This is as cute as babies get. Just before they start crawling. Once they start crawling, man. And at least with Asher, it was not very long after he started crawling that he walked, right? And then once he started walking, it was like he was just a complete menace. Didn't really want to be held, you know. So give him the mouse and let him train. I guess I don't have any of my DOMs I don't have any of the DOMs armed with a live account at the moment, but it is kind of looking to me like I probably could have come into the micros and maybe done something. The spread has come in now. I don't know, is 3.43 a good place to try and take a trade and try and let it run a little bit? I don't know about that one, man. But wouldn't surprise me if you're able to pick up a bit from it. The treasuries do seem to be fighting to go higher, don't they? In fact, I'm kind of looking at this one. 10 is, you know what? I think I will. There's definitely the possibility that it will go higher, but that was not what I was trying to do here. I was just trying to market make around this distribution here. So if we're on the other side of the distribution, I would prefer to only be to have 2 contracts and be taking one off. But because it didn't happen that way, I think I am just going to take my profit right there. That's I'll put it in the title. That was peak baby Ethan right there, man. Yeah. Well, they kind of stopped right there. They haven't gone higher. So it was a good thing that I took that off at that point, I think. It is dropping a little bit now. We are seeing a little bit more sell pressure. I hear mom come back and she's not coming in and getting you yet. I hate it when she does that. She's like, got him away. I will try and do as much as I can until my husband gets, annoyed with it. We're gonna go check. Yeah, it's snowed out there. There's snow out there. He's like, yay, back in front of the dom. I love it. What you looking at down there? Hmm? Oh. I need to get the camera out in the inside of the ring light and yeah, try and take a video of him now. I tried doing it when he was a little younger and I couldn't get him to look at it, but I think he'll look at it now. get some peak pictures. Gonna change the title here so that I can find it later. When I'm, 10 years from now, I want to go back and find the video that has peak. You know what? It's come back a little bit. It's just another one of those ones where it's like, it feels like when I come in and I decide to do the market making bit a little bit, it doesn't always work out, of course, but I'm always surprised at how often I get away with it almost perfectly. Like I'm able to catch that entire range and get out at the top. How do I do that? Because I'm not even like you saw when I was there at the top, I was like, well, maybe it'll go further, but that wasn't what I was trying to do. And then as soon as I got out of it, it came down. So like my reasons for getting out of that were not like I think that a sell impulse is about to come or anything like that. But I got away with it. And it seems like that happens a lot. Looks like the S&P 500 is selling again here. One of the things that I think we're going to have to watch out for is this is all really, really good for the market for sure, right? But now that we're past that, like what's kind of the next thing? And well, the next thing is the Federal Reserve meeting, of course. Okay, but then after the Federal Reserve meeting, then what are we looking at? And, the market is kind of suggesting that the economy could be kind of weak here. So I think that there is a possible scenario where we have a really good December and then after that things are really awful, So like I wouldn't ignore the possibility of the S&P 500 retracing a significant portion of this today. Doesn't look like they've been able to really get a strong rally going since they've opened. Today's flow looks like a simple hedge unwind. I think you might be I'm probably underestimating how much that was at play here, because I'm just thinking, okay, like what this means for the macro and where the orders are going to go and everything else. This was just a really big event. But then there was this whole thing with the put call ratio being at an all-time high and all of that. There was a lot of people very, very poorly positioned going into a CPI report, even though everybody knew that the report was likely to be good. They probably overestimated their ability to hold strong through a data release like that. Because there had to have been some pretty insane short covering off of that news. And like the funny thing is that they were fearing the CPI, and like I was even saying right yesterday, like the reason I was going short was because I was expecting people to hedge for the CPI and the Fed meeting, and it was, I mean, they did sell. I don't know if I was correct about why they sold, but the put call ratio for ES is contrary play for me. Well, so when the put call ratio gets that extreme, I really don't think it can be explained by retail traders, right? I think that the funds overall are just extremely negative, and they may well be justified in doing so, but like this is the thing that I don't think I highlight enough is this knowledge that we have here on this stream, that it's the orders that move markets, and that predicting order flows is a better and more predictive way of explaining what the markets are doing in the short term than the fundamentals are, right? This is a huge advantage because most of these large hedge funds do not understand that. Some of the algorithmic ones do, but most of these guys are trying to buy stocks and so forth based on fundamentals and traditional theses. And you know what? Like in the long term, it's going to work for them. But you get these situations like today where it's just like everybody seems to get on the same side, and it's like, how do you not realize what's happening, you know? Thanks, Kyle, for taking care of the spam there. like to me, how much were they again? Like how many calls for put? Oh, I don't remember what it was, but it was like an all-time high. I think that it was like 2-to-1 or something like that. I just don't understand how any fund comes in and says, oh, like everybody's buying puts, I guess we should buy puts too. Like nobody sat and said, maybe this is kind of sets us up for a short-term rise, you know? Maybe what happens in December could be disconnected from the larger fundamental picture, you know? Whatever. Maybe you can't just fall all year and not have like at least a little bit of a crawl back in December, you know? Maybe. But again, they just don't understand this stuff. So I don't think we realize how valuable this knowledge is because we don't necessarily have the resources at this exact moment to truly take advantage of it. But it's powerful knowledge. It's knowledge that with the right resources and a little bit of luck, you could become a billionaire. I agree with you, but at the same time, they have their reasons buy and sell. Short-term price changes and flows don't mean anything to them unless there's a change in fundamentals. So fundamentals are important not because they predict short-term flows, they define limits for these flows. I mean, dollar won't be at 100 unless fundamentals change. So, I mean, there's a spectrum of different funds, right? So, Berkshire Hathaway doesn't care, right? Because their time horizon is really, really long, all right? And if you are looking at a, greater than 3-year time horizon for your investments, then fundamentals are going to be the best indicators of how your fund is going to perform, right? But if you're coming out and buying puts right now, you're playing a much shorter time frame, right? You're playing a week to week, month to month, at the highest. If you're buying tons of puts, hedging yourself right now, I think. So, here I think that how the fundamentals will affect the short-term flows is the most important thing, but you're going to have to look at all of the different flows as well. And the window dressing that happens in December, the existing options, positions, these are all like important things to factor in that it seems to me a lot of these funds don't do, much to their detriment. And so they come in. There's gonna be a fund manager out there that just got absolutely demolished today and is gonna underperform the market because of it. And if they had just kind of taken the framework that we use, which is what are the orders going to do, they could have avoided all that. Your head looks weird without this. I think you're right. I think my head is weird in general. You know what's one of the funny things that happens to me is like, you'll get a dent in your head from the headphone, right? But then these headphones are like this faux leather, and even though I've only had these headphones for about a year, the faux leather is not holding up very well at all. It's like the leather part is coming off and exposing the fabric underneath, and you get these little like flakes come off of it, and then that's all on my head and stuff all day. Freaking annoying. It makes me want to get a different headset, but yours does that too. The flagship Pioneer headphone is still tops, but there was a couple of iterations of it, and some of the not top of the line headphones that they put out that had a few problems. I think the sound that comes out of this is great, but like there are other things about these headphones that I don't really like. Get soft fabric ear cuffs. Well, so I mean, I want to have DJ headphones, right? There are DJ headphones that aren't leather. The issue was, so I used to have HDJ 1000s, which was like the original, how do you say, the original flagship headphone product for them. And those eventually pooped out on me after like a decade. So then I got these ones because these ones are kind of geared more towards producing. And I tell you what, they've got some great bass. Yeah, these headphones have some great bass. It's just like those things. And one of the things that's important to me is like environment separation. So one, if I'm going to use them to DJ, I need to be able to block out the noise from the actual sound system. I don't think that people that have never DJ'd on a large sound system understand. Like, the sound that goes out to the crowd, those speakers are all facing away from you, so you don't get that sound. The only sound that you hear coming out of the speakers is the stuff that gets reflected back out off of the crowd in the venue, which is delayed significantly. So you can't listen to that sound out there. You can have a monitor. There's usually a monitor that would be like here so that you can kind of do that, because a lot of people, that's the way that they practice. But generally speaking, what I've found to work best is to just have really good headphones and crank that volume and just do it all in the headphone. And that works better. So that means that you really have to isolate yourself from the outside environment, because the outside environment is not it's delayed, right? The Mega replacement headband cushion pad cover. I haven't been able to find that. Let's go look. Look, they came all the way back to my original position. Like 01 was where I was trying to pick some up. It having coming back that far, that fast, makes me a little bit nervous about trying to build a position here again. So I'm gonna wait a little bit. I mean, the pattern has been it will bounce here. Okay, let's first go to Pioneer. Let's go to Pioneer's website. Not working. Oh wait. It's pulling up. Deeper connection. Blah 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 blah. There's a case. I don't think they actually sell this one anymore. What's it called? I don't even remember what these ones are called. Was it HDJX10 maybe? No, it was HRM5. Or maybe not 5, but it was the HRM. Maybe it was HRM6. Patch cables. Okay, so let's see. Pioneer, HRM6. Replacement headband. So here are the replacement ear pads, no longer available. Leather sleeve earmuff, that's definitely what it is. You might be able to like mix and match, possibly. They got the cables, leather ear pads. Eh. What do I search for? They need to be the ones that are like, they're not perfectly circular. Right. Maybe like those. This is a significant pullback, isn't it? The S&P 500 just had a little spike there, actually. So we're getting to like some key positioning areas in the S&P 500. So this is probably a good place to pay attention. See, I think what I got was the HRM6, but I don't actually know. I have to go and find the box. But it kind of makes me wonder if I should just replace them. And if I do just replace them, would I just go back to the flagship product? The HDJ. Well, there's HRM7. That's interesting. I have a pair of headphones that are kind of like that. They look a lot like that. I don't really like those kinds though. Those are super bulky and stuff. Yeah, these are a lot like what I have. No, I think that I will just continue to let them flake off onto my head every day. And eventually it will just be fabric left over, right? Because it's like false leather. Like it's suggesting to me, and you can see because there is a little bit more liquidity in there, that the market makers think that this is a better place to market make, but I'm a little bit worried about it because of how this played out. I don't know. I haven't kept up on the gear so much. One of the things I think is weird is that Tractor was always the top of the line software controller. And now there's like everybody's getting these Pioneer ones, and they look awful compared to me. I think they look awful compared to the Tractor stuff. Do you see the JP pattern in there, or was it which? I'm not quite sure which pattern you're talking about. One of the things that I'll see, maybe what you're talking about. I don't know if this is really what you're talking about, but something that I've seen happen often is you'll have a move down and you'll form a liquidity hole. And then before the liquidity hole plays out, there's immediately another impulse down, and it will spike down and like immediately come back to the liquidity hole. And this often happens at the end of a move. Like they're executing a large meta order, and they're almost done and they just have that last little bit, and so they like to just do it at that and have it come back to the spot. And when that happens, you can fade it pretty reliably. We were mentioning yesterday about that female trader you used to like, well, I don't remember what it was saying about her. What she had showed me. I think that the big thing that I would point out is that when they're executing a really big order, you're going to see it move up. You're going to see the bull flag kind of pattern. You're going to see this. And this time period right here is going to be about 45 minutes. There's a reason this pattern happens. You can't just come in here and say, okay, this is definitely going to happen. This is the pattern, so take it. That's not a reliable trade. But if you know that a multi-legged meta order is coming in, you will see this pattern. This is the result that you will get. And it will happen every time. 100% reliable. If you know the order's coming. And everything that they were doing was based on how they act, how they execute things to impact the market the least. And it turns out that kind of bull flag pattern is like the optimal way to execute it when you're going to buy a ton of something and you know that it's going to move it. It's kind of interesting, right? I'm gonna look through here, see what's out there now. XDJ10s would be what I would normally be going to. But there's a couple of other brands that have been kind of weird. They still like the HD25s, huh? A lot of people like those Sennheisers. I never like them. Those ones sit on the ear. I really want something that covers the ear. Looks like the top of the line one, the X10 is pretty good. Don't the X10 have wireless? 15. Oh, the X10 has 50 millimeter drivers? Really? I think I'd rather have silver, even though the silver is a little bit more. I wouldn't mind a DJ headphone that is wireless. Just tell your primary broker and tell them to call everyone and let them know you're going to put in a large order and hit market order in your direction after the quotes have been pulled. Let's not do anything illegal, please. Oh, Technics has a set of cans now you can get. That's interesting. Audio Technica, I've always heard good things about theirs. Pioneer says that HDJX10 were subject to military grade testing while they were being developed. Org. Those ones are ugly AF. Nothing illegal about chaps talking and bouncing ideas with each other. Dude, so actually, what do you think about all of the CPI rumors that we had yesterday and the significant sweeps and buys that we had before the official release this morning, the market was definitely acting like a lot of people thought they knew what the number was going to be. And of course, everybody thought that the number was going to be good, but come on. I mean, the industry is really interesting with the way that it works. I think one of the mistakes that a lot of retail traders make is they think, oh, there's a professional trader, so I should just do what the professional trader does. No, because you're playing a completely different game from them in most cases. Most professional traders are not sitting in and making a determination about, is it going to move up or down today? I think that probably the closest analog in the professional world to what we do as speculators is going to be like the big commodity houses like Cargill, for instance, and those guys are not really playing on an intraday time frame. Their trades usually take weeks or months to play out, right? So the obsession of retail traders with trying to figure out big money. Nah. I mean, like, I think that you want to understand the big traders and you want to be able to predict what they're going to do so that you can front run their order flow. But you can't trade the way that they trade. It's a completely different game. What they're trying to accomplish is completely different from what you're trying to accomplish. The resources that they have are completely different from the resources that you have. So you really kind of have to forge your own path as a retail trader. Understanding how if you get a chance to speak with a professional trader, right? That's the approach that I would take, is how can I understand how they execute their trades and why they make their decisions as well as possible so that I can predict what they're going to do, rather than I want to try and imitate them. If you're able to predict what they are doing, then they wouldn't be any good to be where they are, don't you think? So, I'm gonna say no. So, I think one of the big things is that the kinds of trades that these guys are making. So like, let's give an example. You're a hedge fund and you think that oil is going to go back up to $100. So you're going to come in and buy oil, right? And if you come in and buy oil, you could very well, with the kind of the liquidity that we have right now and everything, create a move like we had yesterday. Okay. I don't know what was causing that move. It was informed trading, news, whatever the deal is, but it's possible that a large player like a Cargill, for instance, decided to come in and buy it, right? Now, can you predict that? Yes, you can. You absolutely can. And kind of the issue is that, at least in the current market, the amount of money that they lose on execution from block trading firms front running them or retail traders front running them is really quite insignificant in the long run compared to what they're actually going to make, right? Because they're going to come in and they're going to buy it up, and maybe it moved it up like $3, but they're looking to make money from like $70 to $100, so they're going to make $30 a barrel, right? So if they lost 2 ticks somewhere, does it matter? No. But they are awfully tricky when they get going, right? Like what happened to us yesterday, we had it right, we knew what they were going to do, but they were able to play the game really, really well and make me give up on the trade early, and then end up chasing it. And I did make money from chasing it, but it could have been so much better of a trade. But they're really good at what they do, right? That doesn't mean that you can't pull something. what's your thought on the new AI chat GPT in using to code your algo trading? So I don't think that chat GPT is not going to write an algorithm for you that's worth shit. It can write a lot of simple things. It can write like a Bollinger Band strategy or whatever it is that you ask it to, but these are all going to be strategies that aren't profitable. You're not going to make an HFT out of that. Probably not. And the reality is that most of the stuff that ChatGPT generates right now won't even compile. So it's not really useful to you unless you're already a coder. So there was the founder of that company, OpenAI, which is kind of a weird thing because Elon Musk kind of made it originally, and it was supposed to be open source and stuff, but it's not open source, and they're just making money off of it, charging people for it. But he did an interview and he said, you know, like ChatGPT can do a lot of amazing things, and the big thing is that it's able to do amazing things that look very, very real and are really, really impressive, and so that's why it's picking up all of the attention and everything. But there are still very serious problems with it, and the answers that it gives are not correct most of the time. So I really think that people are overhyping it. Like the creator of it is saying that people are overhyping it, okay? And like in terms of like, are you gonna write an algorithm with this? I think that that's very, very naive. Okay, this is not going to write something that can compete with the algorithms that like a big bank is writing, for instance, or high frequency traders are writing, right? And furthermore, you got to realize that we already kind of live in a world where most of the statistical edge has already been arbitraged away out of the market by robots anyways, right? So some people are like, well, how is this going to affect the market when anybody can write an algorithm like this? It's not going to change a thing, because the algorithms are already out there doing that. Any algorithm that's worth a darn, it's already out there trading it, and already removed a lot of those inefficiencies, you know? Yeah, the robot does not have access to that type of data set, which is extremely secret. I think that where the robot can be really beneficial is that it can give you some, like it can help you summarize things, for instance, right? So like I made that video the other day. I made a short video that was about 3 minutes long, that everything in it was AI generated. What I did was I told it to explain Algorithm Chris algorithm like they were the Wolf of Wall Street. So go and watch that video, and at the end of that video, ask yourself, what did I learn? Because you'll learn like the general ideas of Algorithm Chris. Yeah, that it's like an optimal execution algorithm, but you won't know anything about how it actually works, right? It's like it's really good at generating vapid content that doesn't help you. You know, you get what I mean? So I really think it's overhyped. It's nice for hints for pointing what causes specific errors in code. I haven't tried that yet. I just the examples that I've seen of people using it to generate code, the code that it generated often would not compile, right? So I guess a better way of of explaining my position on this is the chat GPT might be good at summarizing and explaining things to you. It might be an effective learning tool to kind of generate base, like the basic understanding of markets that really you should have before you're trading, but most retail traders don't have. It might be able to help you that, but it's extremely unlikely to generate an actual measurable edge for you through some sort of algorithm, because it is essentially looking at other code to generate that code. And so it's going to be something that somebody else has already written. So in other words, it doesn't really replace knowing how to program if you want to do HFT. If you want to do HFT, you've got to be really smart and at both programming and the markets. And GPT is not going to do that for you. It's also outdated for a lot of code. It does a lot of interesting things though. Only goes up to 2021. Well, my understanding is that they trained it on like a data set of some sort. So like that data set does not include new information. So like you can't come in and say what is the CPI report going to be tomorrow, because that's not in its and any of the content that's out there that's been based on what's going to happen in the market tomorrow. It's that's not in its training set. It's old data. And it tells you that if you try and ask it about something about like current events, it'll say, I don't know anything about that. I don't use live data for what I do. Old Man Chris, I'm not familiar with that one. I definitely feel like where we need to go next is portfolio management. I've been thinking about this, like what paths should I go down to start? I've kind of been thinking I should do I should run multiple funds here for practice. I think that I should have like a macro fund, and I should have a bottom up fund. So like one fund that is discretionary for me trading macro fundamentals, or kind of what we do on the stream, but on a higher time frame, right? One of them that is picking really good companies and running that over a long period of time. And for the purposes of, since it would be a fund and your orders will have impact, we will just only be able to take closing prices, essentially. That's what I'll do. Well, I don't understand. None of that really matches up with. Okay, whatever. Anyways, so I can do those two, and then I think I would want to have a more algorithmically based fund, like maybe it's just a momentum fund or something like that. And constantly be trying to make more of these. I think that that's where we have to go in 2023 and 2024 is start working towards managing a fund. Well, do they really map an efficient frontier? I guess you kind of do. But that's not, I don't think that that's part of the original paper. I think that that's more the practical application, right? Is like you want to have a model that you use to determine what you think the flows for the day are going to be, so that you can determine if there's going to be a bias to the upside or downside that you need to account for in your execution, right? Because when you say efficient frontier, I think more about like how you pick individual assets, right? That you want the greatest return for the least amount of risk. And oh, it's 8:49. This actually went through Well, it's been a long session, but it feels real quick now. So I wanted to go back to what we were talking about earlier about Lucas was saying, you know, the game is that the big players, they are doing everything that they can to hide their impact, right? So this is the first thing, is that it's really hard to see that like meta orders are coming through by looking at the market data. Like by the time it's very clear that that's what's actually happening, it's too late. I think that's a lot of how the optimal execution works, right? That's part of why it works, is that by the time that people figure out what's going on and try and like jump up on board with the momentum, like the liquidity hole is formed and they all get caught, and then you get some of that volume, right? So you really have to be able to predict what they're going to do, is the thing. You know, like, and you're not going to be able to do it every day, right? But there are situations where you can get a really solid imbalance to take advantage of. So I don't know if, you know, in this situation, if we were to have come in and traded and made money, I mean, I did take a sim trade. That I think comes down to our technical expertise, right? Because everything after that news, I feel like a lot of it is random. It's not really firm trading. Another bullshit that the efficient market hypothesis has co-opted for itself. Now everyone thinks it has to do with portfolio constructions. Oh yeah, I guess. I don't think I understand that subject completely though. I think I had heard the term before, but like the first time that it had ever been something that I had studied the efficient frontier was in regards to learning for the Series 65. So, you know, I haven't done a whole lot with like portfolio level strategies. But it's definitely the case that the efficient market hypothesis has kind of like has its tentacles into every part of the financial markets, and there are many popular approaches to markets that are based on this efficient market hypothesis that work kind of okay, but in the end are ultimately flawed. I think the best example of this is the Black-Scholes model, right? Because the Black-Scholes model assumes an efficient market. So the Black-Scholes model, if you use Black-Scholes, it's significant because they do explain, it does explain how how expected volatility and everything factors into a price and everything. So from that perspective, it was like a very useful and groundbreaking model. Okay, it really was. But in terms of like actually pricing options and making money from it, it's total shit, you know? I blame MIT for that BS. That's why I can't take anything seriously that comes out of MIT regarding finance/economics. Really? That's interesting. I have to, it seems to me, I don't feel like I know the scholarly world well enough to really know where the best places to go are, but it seems to me that the University of Chicago has a program that's pretty good for this stuff. Chicago is one of the big ones, at least. I don't know if that's the best place to go, but love it. Somebody came into the Discord and asks, how do I learn to trade? And somebody responded, devote and let it consume your life, essentially. That's exactly how it works. Consign yourself to the fact that you love markets and that you're going to let it consume your life, and that you might not get paid for all of the effort that you put into it, but you do it because you love it. Is what you have to do. But for like half a century, none of the American journals in those subjects didn't publish anything criticizing the efficient market hypothesis, because every journal had at least one MIT dude. It's an editorial board, so they veto all. Oh, really? Okay. Well, one of the things that I do find really curious is that the market microstructure field has a considerable amount of evidence that disproves the efficient market hypothesis and many other kind of sacred cows in economics. And the professionals absolutely utilize these studies and have incorporated it into the way that their businesses work and everything. And yet it's still kind of like a dirty subject in the academic community. There's still a lot of people that don't put any stock in it. That these guys doing market microstructure that are at the top of the field of market microstructure still have difficulty getting published in the top economic magazines and stuff. It's super weird. And I was reading, when we were talking about this the other day about Fed Guy 12 saying that the Federal Reserve needs some reform. I think what he was getting at was that their people get institutionalized and everything becomes about your own personal legacy and like building a nice cushy future job for yourself. And I think what he was essentially saying was like, the structure of the Federal Reserve is great. Like, the Federal Reserve is there to support maximum price stability and employment. But because of the institutional bias at the Federal Reserve, they are not nearly as effective at it as they should be, because they're behind on a lot of economic developments, like for instance, agent-based modeling is like a really big new field that could yield some really important insights into markets, and I think they could be particularly useful to modeling inflation, which has been notoriously difficult to model, right? But do you hear anybody at the Federal Reserve talking about that? No. So he was right that I think ultimately he was right that because it's run more like an academic institution where performance doesn't matter, they don't actually have the best handle on where the economy is going and what their policies should be. And so they're always seem like they're a step behind the market. And that's why he wasn't saying like, the Federal Reserve is an awful system, we should just get rid of it. He was saying that, I think what he was really saying was, I think that I should have been promoted even higher than I was, and they didn't. I was held back by the institution. So I think what he was kind of quietly trying to say. Well, it's time for me to get going. I was about to go into a different subject, but I think we should leave it there. We can get into it tomorrow. So I have another interesting subject about, how our conception of self can kind of hold you back, but that's for another day. I'm gonna see you guys tomorrow. In the meantime, stay excellent, team.